answering your questions about retirement. It's Money Talk with Michael Eastham.
I'm thinking about investing in some municipal bonds. Are these a good way to earn more income?
All right, well, municipal bonds, this is a great question, but it's certainly in that category of don't try this at home, because there are a lot of different factors and characteristics that you need to understand if you're going to dive into the world of investing in individual municipal bonds. So, for example, you have to understand, what are the ratings of the municipality? Is it a AAA rated municipality? Is it a single A, or is it a B or a C rated municipality? All of those have an impact on the strength of the underlying bond. But that's only scratching the surface, right? You have to understand, is it an insured municipal bond, or is it uninsured? Is it a general obligation bond, or is it a revenue bond? All of those pieces have an impact, as well as the duration, right? How long is that municipal bond going to be out there? Some municipal bonds can be out there for 30 years. That may not be fit in your time horizon, so you need to understand that. All of those characteristics also have an impact on what the interest rate is going to be. Now, I know that the most exciting aspect of municipal bonds is the fact that they're tax-free in many cases, and that can be true. However, the state that you purchase could have an impact on the taxability. So in other words, if you live in, let's say, New York, and you buy a New York municipal bond, well, that could be triple tax-free, meaning you don't pay tax on the interest on your federal tax return, your state or local taxes. So that could be a good thing. But if you live in New York and you buy a Maryland state municipal bond, well, then you may have to pay tax on the interest on your New York state income tax return. So it can be very, very complicated and very, very confusing. The other aspect about the fact that people have a misconception about municipal bonds, they think, okay, it's tax-free. Well, remember this. The interest is tax-free, generally speaking, but I just talked about how it may or may not be in all situations. However, if you sell that municipal bond early and you sell it at a higher price than you paid for it, that's called a capital gain, and that is not tax-free. So you've got to keep that in mind. You also have to remember that if you're purchasing municipal bonds and you're collecting Social Security, well, the interest on those municipal bonds are added back into what the IRS calls provisional income to determine whether or not you're going to pay tax on your Social Security. Another complication. And then a lot of times people just try to make it easy by saying, well, I'll just buy some municipal bond funds. Well, that may be good if you're in the long-term buy and hold stage, the accumulation stage of life. However, if you're in the income stage of life, the distribution stage of life, well, then you may end up selling shares of those bonds in retirement. And that's a no-no when you're trying to create consistent, dependable income. So keep all of those factors in mind, and also remember that with a municipal bond fund, then you actually may end up having gains even though the value of the bond drops down. That could be a tax bomb as well. And I appreciate the fact that you're interested in municipal bonds, but just remember, it's a don't try this at home, and if you have additional questions, certainly reach out, let us help you. Thanks so much for that question.
If you've got a financial question you'd like to have answered, click on the link below to submit your question. You may hear your answer on an upcoming edition of Money Talk.